FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
And we are back on the Financial Survival Network. I'm Kerry Lutz. We're really pleased to have back with us Jerry Robinson. You know him well, economist, best-selling author of the book, Bankruptcy of Our Nation, Your Financial Survival Guide. And you can find him on the web, well-known popular site, FTM Daily, as in Follow the Money. And it's been going strong since 2010. Jerry, welcome back.
Hey, it's always great to be here. Thanks, Kerry.
Hey, it's become a cliche on the show. I always say there's so much happening, but there is so much happening. It's really impossible to keep track of it. But you just put out a report on the hidden history of the Fed. And boy, is it ever a history, and is it ever hidden, isn't it?
It is. It's a hidden history. It's a sordid history. And many people don't know it. We certainly hear a lot today about the Federal Reserve. And, I know you, Kerry, you've been doing this for some time, and we continually see, you and I both, I have a radio show, I have a website, and we get readers and listeners questions, and we still see people waking up to what the Federal Reserve is. And so many of them are just now coming to the realization that the Fed has been insidiously attacking our economy from the inside out. But what many of these people don't know, as they're just kind of waking up, is that this institution goes all the way back to the very founding of our nation. It actually began in 1791 with the first bank of the United States, which was 80% owned by Europe. And so, we have had this consistent problem with central banks since the very foundation of our history. And this report that we've just put out is completely free. It's a 40-page, full-color report that really serves to educate somebody on the history of the Federal Reserve. They don't want to read a whole book, but they do want to get a real quick grasp on what the Fed's all about. They can download that completely free at our website. They just go to ftmdaily.com/Fed, and there they'll see a button where they can download the report. And again, it's about 40 pages long, but it goes through the entire history from 1791 all the way down to today. And what we're seeing today with the Fed is absolutely astonishing. Yellen, the Fed chairman, just recently during a press conference and a hearing, made the comment that it was probably going to take anywhere from 5 to 8 years to suck all this excess liquidity out of the markets. And she also said that she is concerned that our debt levels are unsustainable. So we have confirmation now, even from the Federal Reserve, that the problems impacting our economy are real. And for whatever reason, Kerry, many people are still refusing to see, even when the Fed chairman herself says we have unsustainable debt loads. The people just don't believe it. They think the stock market's going to keep going higher. They think everything's going to continue as it always has. And we really are operating on borrowed time.
Well, Jerry, the stock market in Zimbabwe kept going higher too.
It did. Yeah, it was a good time to buy. Whenever the inflation hit, sure.
A real buying opportunity, right?
Sure.
It's always a buying opportunity when there's hyperinflation. Well, I'm sure you caught that article about Einhorn, the hedge fund operator who bet heavily against mortgages and derivatives, who cleaned up. He finally got to have a sit down with Bernanke at a dinner. I don't know how much it cost him for the privilege. And he likened it to the 35th jelly donut, where, when you're hungry, the first couple of jelly donuts, if you like them, and I never have, honestly, but hey, if you're into jelly donuts, man, the first one going down sure does seem good. But by the time you get to the 35th, you want to basically retch your guts out. And
yeah, Yeah, the utility tends to decline the more you have, you know?
Diminishing marginal utility, as
Yeah,
they
that's
call
right.
it. And it works the same way for money printing. The first couple of dollars printed, man, they sure do make the economy look much better, even though it really isn't. But by the time you get to the 16th trillion printed dollar, freshly minted dollar, it doesn't do much good, does it?
Yeah, good point. And that's really where the United States is. It's printed so much money and it's become so completely unprecedented that it's distorted the markets so much that, the whole entire business cycle that economists used to watch has become so distorted now. That's why forecasting has become almost impossible in this current environment. It's just impossible to know what's going to take place, tomorrow, let alone, where the market's going to be next year. So there are quite a few people out there who are making predictions and forecasts, and they're saying that the market will be here 6 months from now, or maybe it'll be here a year from now. And we don't have anything like that because, again, our crystal ball is just too fogged up. I mean, we can't see anything. All we do know is that this thing is going to get hit hard because, as we all know, all around the world, people are working to take away our competitive advantage. They're working to level the playing field. They're working to see the U.S. dollar come down and for other currencies to rise. And one in particular has been China. We've been keeping our eyes on. Oh, the talk of the demise of China, I believe, has been very much overplayed. I know that there's some massive problems. We've talked about their $24 trillion debt problem. There's all kinds of structural problems in China. But you know what? There were all kinds of structural problems with the United States economy, too, just prior to its rise. And so China is really still in its infancy when it comes to its modern economy. And we expect that, some of these hiccups, even though they're very big and large, are just going to be part of the growing pains. But we don't see the demand from China slowing down in the long term. And so there's certainly somebody to watch, and there's certainly someone who wants to take the crown of the United States, as does Russia. And I'm sure you've been talking about this quite a bit on your program lately with everything that's been happening.
Yeah, well, interesting thing about China, I see them as being where the United States was in 1929. And, 1929, yeah, it knocked the United States and the world for a loop, but it didn't really stop the ascendancy of the United States, and it's not going to stop the ascendancy of China in the long run. Difference being that in 1929, the political structure of the United States was far more solid than the political structure of China today. That's their Achilles heel, if you will.
Yeah, I would agree with you on that front. And another thing about 1929 that's interesting is the fact that what, of course, came out of the Great Depression was Hitler and of course, the fascism we saw all over Europe, and it led to war. And I think that we're in that same place now, Kerry. Again, I don't have a crystal ball. I'm not smart enough to know exactly what's going to happen tomorrow, but I do know what I feel in my gut, and what I do know from history, and that is that we're just on a reckless path to war. And I'm talking big war. And I think the same thing goes for, and I think we've talked about this before on the program, but there's a lot of people concerned about a coming global currency reset, kind of a Bretton Woods part two. And again, we point people back to realize that what gave rise to the first Bretton Woods was war. And we feel that the vested interests that are all over the global economy are not going to just bow down and move into some sort of new Bretton Woods 2 without a fight. So we expect the pattern to continue, to see another major war followed by another global currency regime put in place. We don't think it'll just be a silent coup. We think it's going to be a violent war followed by a new currency regime put in place.
Yeah. And speaking of that, we've been hearing all sorts of, and this is a little off the track of what we were going to discuss, but I think it needs to be discussed. I'm sure you've seen these pictures of some weird aircraft attacking the Taliban in Afghanistan, of the likes of which an aircraft you and I have never seen anything like. Did you happen to catch that?
I did. I saw it in the Daily Mail, and there were kind of split opinions on it from what I was reading. It looked like they can't tell if it's fake or not, but regardless, if it's not fake, it is something that, yeah, you and I have never seen. And in fact, experts who know what drones look like and know all the different models say they've never seen anything like it. So it could be a secret weapon. I mean, can you imagine the United States keeping a secret from the people as far as technology? Of course they are. So it could be that, or it could be fake, who knows. But yeah, I did see that. That was an interesting thing.
Yeah,
that was interesting.
By all appearances, doesn't look like it's fake. It appears to be real, and it fires off multiple volleys from something that looks like a cannon but isn't, because when it fires these volleys, it's silent until they hit.
Right.
And then there's some commentary from, evidently it was taken by a Marine. It's allowed to go onto YouTube and be disseminated all over the world. And supposedly, this is why Russia and China have been refraining from all-out war with the U.S., because there's weapons that they believe the U.S. possesses that they don't. And, well, we'll talk more up next on the Financial Survival Network.
FSN Radio.
Do you have Medicare or health insurance through your employer? If so, listen up. The healthcare reform wasn't written to save the healthcare industry or even to lower healthcare costs. Shoot, it isn't even designed to insure the uninsured. It's just a temporary political byproduct. Like a flat rock you step on in a swiftly moving stream, Obamacare is just a means to an end. Want to learn more about Obama's ultimate objective? Then you'll want to review our latest research presentation found on oclies.com. In it, a health expert and industry insider explains what you think you know about caring for your health is about to drastically change in 2014. Plus, he details the simple steps you could take to save thousands of dollars per year in health costs. It's free for you to preview at oclies.com. Don't waste time. What you don't know about the healthcare reform could hurt you and your family.
The Financial Survival Network. It's all about what's next.
And we are back on the Financial Survival Network. We've got Jerry Robinson of Follow the Money Daily with us. Jerry, so looking at getting a little bit further back down to earth here and looking at the markets, heavy bearish chart formation on the NASDAQ and the Russell 2000, and going back to more traditional market measures, there is always this thing, 3 steps and a stumble, meaning, okay, they're not raising interest rates at the Federal Reserve, but they are pulling away the punch bowl in at least the tapering 4 steps. Okay, they've cut back quantitative easing, $40 billion a month, 4 steps, $10 billion each month. So that could well lead to a market correction, right? I mean, you've seen a 10% correction already, right? We haven't seen a 10% correction in years.
Yeah, that's a good point. You look at the Russell 2000, for example. I'm looking at a chart of it right now as we speak, and you couldn't see a more clear head and shoulders emerging right there. Also on the NASDAQ, the same thing, a perfect head and shoulders. And we're concerned about the overall the neckline, and they still haven't penetrated those areas. That would, of course, would be the major sell signal on the head and shoulders level. And we're looking at the NASDAQ, the Russell 2000, the Dow, even kind of suffering this. The S&P 500 is still holding up quite well. It's kind of in this sideways market ever since the beginning of March. We really had a nice February, and it looked like the markets were going to continue higher for the rest of the year, or maybe at least into May. But we just kind of stumbled at that point. And there's all kinds of reasons. I mean, there's been, of course, the talk of the weather. There's been talk of the poor corporate earnings. There's been all kinds of things. But Again, we never make forecasts of where the market will be tomorrow because, again, what we do, our whole philosophy is to follow the money. We pay attention to what is happening and we base our decisions based upon that. So we're just purely trend traders. But the current trend right now remains up. We have a market barometer that we provide to all of our subscribers where we tell people, okay, where is the trend? Is it up? Is it down? Or is it, sideways? And right now, the market trend is still up. It's still moving higher. But as soon as that changes, we'll alert all of our subscribers with a yellow light. And then if it begins to move even lower and begins to break the uptrend, we'll actually move the market light to red, indicating that it's probably time to lighten up on your stock investing. If you have money in a 401k or an IRA, at that point, it would be wise to maybe lighten up, maybe take some your profits and go to cash. Because the idea here of sitting through another mind-numbing, precipitous drop in the markets is just unnecessary. There is a concern, Kerry, also about the Fed, and I don't know if you share the same concern, but I'll tell you what my concern is that what we have seen since 2010, 2011, when the Fed really got aggressive and began pumping money into the system, is that we have seen an unprecedented amount of money pumped in. Therefore, the markets, of course, are going to rise. I mean, it's like you have a dead man on the table in an ER room and you're pumping him with electric shocks. You're hoping the man will wake up, and that's exactly what they did here with the economy that by pumping money in. Well, here's the problem: once they take this away, their expectation is that the general trajectory of the market, i.e., it's going up, is going to continue. Well, I don't have that much faith in this market to think that it's going to continue to go higher without constant intervention from the Federal Reserve. So saying all that, I'm going to make this statement, and that is, I believe that once we reach this particular peak we're at now, we will never get back to this top again without extreme Federal Reserve intervention, because these levels were artificially produced. And S&P at nearly 1900 was artificially induced. Therefore, how do we fall and then come back to this level without that Herculean type of intervention from the Fed? I don't think we can. And so therefore, I think it's incumbent upon investors, people who have money in retirement accounts, to be very cautious. When this market begins to trend downwards, if you're banking on it just coming back up sometime before you retire, you have to realize that it may not. And the reason I say that is because, again, the Fed has created these artificial levels, and unless they're going to continue to do this over and over and over again, we can't sustain these levels.
Hey, and there's a couple of other things that have happened this year. And like you say, you're not a forecaster. You're more a momentum, follow the money type person, which is, where's the smart money going and where is it coming out of? And that is the January effect, which isn't always correct. But when you've had two stellar years, 2012, 2013 in the stock market, and then you have a third year where the January performance of the stock market is decidedly down, not dramatically, but decidedly, you have to be very cautious when you're looking at the stock market. And we had a down January, and now we've got May, and the old maxim, sell in May and go away. How many years has that one been true for, Jerry?
Oh, it's been several times, and that January hit was a blow to the gut for the market, and it took a lot of momentum out of the direction that we've been going, but it gained all of it back in February, and then it just went sideways from that point ever since March. And so I think the sell in May and go away maxim is probably going to be playing out really well this year. If you look at the very beginning of May, it was the second highest level that we have been in. It almost appears to be the right shoulder on a head and shoulders chart on the S&P, albeit a much smaller version than perhaps the Russell 2000. But when you look at the S&P 500 on a chart now, it looks like selling in May and going away might be a smart idea, especially with all of the tensions that we still see. War, breaking out. And I don't, I'm sure you have comments on this, Kerry. I'd be interested in knowing what you think about this too. But from a wartime perspective, what goes up? Well, oil certainly goes up, gold goes up, silver often goes up, hard assets go up, and sometimes the stock market, takes a hit, temporarily. Then it usually goes back up. But I think if we're on the cusp of war, which we very well could be sometime this year, then selling in May may be one of the smartest things you could do.
Yeah, and it's certainly cause for concern because, this could be the proxy war. It could be like the next Afghanistan for the Russians. And you see that Putin's moving very cautiously. He's not getting sucked into the Ukraine so quick. But is it trying to suck Putin into a debilitating war, trying to drain the Russians' energy and trying to get rid of him? Is that really the goal here? Or I've seen another analysis, Jerry, which is basically it's cover for the coming global currency,
Well, I think with Russia, what you have very clearly is as a nation that is very cognizant of the fact that it's been attacked from its western flank several times throughout history. I mean, Sweden has attacked it, Germany's attacked it. I mean, you go back and you look and see what's happened in the past, and Russia is extremely vulnerable over on that side, and they see what's happening in the European Union. The European Union, we've been long-term bullish on the euro and the European Union, predominantly because we feel that the European Union is the prototype for this for other regional organizations. And so when Putin began comprising his Eurasian Union, he admitted very plainly that he was taking the playbook directly from the EU. He was taking their whole setup, their monetary setup, their economic setup, and he was basically using it as his template. And he sees how the European Union is spreading. And Europe wants all of those Balkan states. They want access to all of those Eastern European states. They want to bring them into the fold long term. That's their plan. And Russia wants that area as well. And I think it's been beaten to death about how Russia does provide so much natural gas to Europe. Europe is just in a very bizarre place. And I also have to say that it's been very interesting to see Germany and Japan, both of which were the aggressors in World War II, now being told by Western powers to arm themselves. I mean, we really are in a bizarre time, Twilight Zone. I mean, now we have Germany and Japan we consider good guys now, and we're telling them to take up arms and rebuild their armies as much as they possibly can. So, I think the only thing we learn from history is that we just don't learn from history, Kerry. I just think we're getting ready to see it all again. It just goes in circles.
I've heard that one before. And when we come back, let's talk about the ECB and the 5 levels of financial freedom.
FSN Radio.
Urgent alert. Ex-Secret Service agent claims it's worse than people know. One of Obama's former Secret Service agents recently smelled a rat. What he discovered inside our government was so devastating, he only saw one option. He quit. What's worse, he fears what he found could affect your job, your neighborhood, and most importantly, your family, very soon. It's worse than people know, he said in a recent interview, and I'm not trying to scare you either. We too share his concerns. This is why we've devoted the better part of 3 years collecting solutions for nearly all problems created by intrusive governments, and we've succeeded. Go to hiddensecrets1.info to check out all the details. Our panel of insiders have devised a legal but sneaky set of solutions to help you reclaim your privacy from the NSA, opt out of Obamacare, and make a bundle from little-known investments and small business opportunities. Simply visit hiddensecrets1.info. That's Hidden Secrets, the number 1.info.
The Financial Survival Network. It's all about what's next.
And we are back on the Financial Survival Network. We're talking with Follow the Money Daily's Jerry Robinson And Jerry, what about the ECB? They're getting to that moment where it's either print or deflate, right?
Yeah, and really the month to keep your eye on is June. The president, Mario Draghi of the ECB, has been talking about printing for some time, some sort of new QE, similar to what the United States did, albeit probably a bit smaller. We don't know exactly what it's all going to look like, but we do expect them to do it. Now, up until this point, Draghi has just simply threatened to print money. He's just threatened to do this, and that's been enough to stave off the overall collapse over there, and especially preventing another recession. But I was just listening last night to the previous ECB president, and he was making the comment that the European Union is out of the woods. The worst is over. Now, I don't really have a strong opinion on that either or, but I do believe that once we see the money printing begin, that these markets, which are already up very strongly, are just going to continue to rise, just like the United States stock market did. We have been really riding much of Europe for the last couple of years. Greece has been good to us. Italy has been good to us. Spain has been good to us. And so we are heavily investing in some of these European countries, and we expect when this action does come, possibly June, that we're going to continue to see it. The euro is going to fall. The dollar is going to get a bit stronger because of it, but the overall European stock markets are going to rise probably sharply in response to this as more money moves in. So we're watching the ECB. I'm bullish long-term on Europe. I do think that despite their structural flaws and despite the fact that they're a train wreck, that these guys over there are hell-bent on forcing this to work, and they will make it work come hell or high water, despite the fact that many people don't like it, including, and in fact, we'll know here in just a few weeks, because in May, there's going to be a major European election coming in the third week of May, and we will see what happens. We will see who wins. Will it be the people who want the European experiment to be extinguished? Will they be the ones who take up and win the elections, or will it be the Europhiles, the ones who want to continue to see Europe grow and become deeper and broader? I think we're going to see a stamp of approval for the European Union after these elections are over. That's just my guess. We'll see.
It's kind of they're at this point, Jerry, where how do you turn back? How do you get out of it now?
Yeah.
As bad as it is, what do you do?
Yeah. Well, and think about it. I mean, we do hear people say, well, there's going to be a global currency. Well, you cannot have, this is, unfortunately, sometimes people, when they say things like that, they don't take it to the logical conclusion. How do you have a global currency if you can't even make a European currency work, a pan-European currency? And so, if you want a global currency, you have to figure out how to make a European currency work. You have to figure out how to make a pan-Asian currency work. You have to figure out how to make a pan-African currency work. So what these monetary policy makers are struggling with is how to actually take a currency and apply it to several different countries, despite their different cultures, different languages, different policies, different histories, and that's a challenge. That's a really major challenge. That's why we don't expect a global currency to appear tomorrow. They can't even make the euro work. So it's going to take some time, but we do think that long term, Europe is here to stay, the euro is here to stay, and these European markets are probably going to pop over the next couple of years thanks to this intervention.
Yeah, well, if there's any lesson at all from the money printing extravaganza that took place in the United States, it's good for the stock market, that's for certain. And that leads us to your 5 levels of financial freedom. Just briefly tell us what that's about.
Yeah, we just put out a brand new report on our website, and it's a free little e-booklet about how to achieve financial freedom. A lot of people are trying to break free financially today. They see the writing on the wall. They want to do something for their families. They want to take control of their financial lives. And so we've put together a free e-booklet that's very simple. explaining our 5 steps or 5 levels to financial freedom. And it's right there on the front page of our website. People can go there and they can download it absolutely free, the 5 levels of financial freedom e-booklet. But in essence, it runs the gamut from very beginning, first level of building an emergency reserve, all the way to level 5, where you are financially independent and you're taking your money and having it work for you. Advanced investing, speculative investing, diversified investing. So there's a lot there. Multiple streams of income, diversifying your savings, using PACE, P-A-C-E, for investing to protect against inflation. PACE stands for precious metals, agriculture, commodities, and energy. So what we try to do, Kerry, is we try to make it real simple for people just to hop on and move towards financial freedom. And this free little e-booklet will help them. They can get it for free at our website, ftmdaily.com.
All right. Excellent. And really, how much money do you need to start with here, Jerry?
Well, I think you either need to have time or money. Some people will say, I don't have either, and you know they're lying, or they have their priorities out of whack. Everybody's got some one or the other. So if you don't have any money, that's okay, as long as you have time, because you can always trade your time for money. But if you do have money and you're ready to get started, I would say the very first thing to do is to build an emergency reserve of 6 months of liquid savings. So however much you earn every month, let's say you earn $3,000 a month, you want to run as quick as possible to get at least 6 months of liquid savings in place, and then you want that diversified. And so that's what we teach. We also teach the importance of, once you have all that saved, then keep saving, but then put it into investments. So it trickles from your savings down to your investments once the savings bucket is full. But again, some people out there may not have any money, or they don't have enough savings, or they don't have any retirement savings. Well, what we're trying to help people to do is just to take action. So it's okay if you haven't started yet. That's okay. It's not too late. You just got to get started right now. And our 5 levels free e-booklet will provide some incentive, and it'll provide some direction on how to do that.
So the key is get started now. Stop waiting.
Don't delay.
Don't delay, right. That makes total sense, because you can only put these things off for so long, right?
That's right.
So
the clock is ticking.
Clock's ticking. So anyway, what about your book, The Coming Bankruptcy of America? I mean, it's been a bestseller for a while, and you've covered a lot of what we talked about here.
Yeah, the book Bankruptcy of Our Nation was written initially back in 2000. I couldn't get a publisher for it for a long time. I was storming across stages across America talking about, the dollar and the Fed, and this is back in 2006, 2007. And we finally got somebody to publish the book in the very end of 2007, and it came out, and it was all about the 2008 crisis, so it just came out just in time. We revised and updated it in 2012 because we believe, as has been said, I'm sure, many times on your program, that the 2008 crisis was the warm-up. We really believe that the next major downtrend is going to be absolutely devastating to the U.S. economy. And so that's really what this book is about. It's about the next collapse, and it's about what people can actually do. And I think you know that we are very strong on action points. We even have on the back of the book, the time for debate is over, the time to prepare is now. We think it's silly to be, debating about certain things whenever we don't have a plan in place. So the book is really all about what's coming, why it's coming, and then it's chock full of strategies that people can take to protect themselves and their finances.
Yeah, well, yeah, obviously you're kind of preaching to the choir here, but yeah, being prepared is one of the most important things that you can do, and especially for an event like this that is so out and out predictable, because you just know that it's coming. I mean, it's really the best use of our time, because you and I on a daily basis, we're getting barraged with all of this news. We're seeing all of these things that are happening. We're trying to communicate it to our people, and of course they're seeing it and they're worried and they're concerned. Well,
there's only a couple things you can do. One, you can, pull your hair out and get worried and get upset and, write your congressman and pick up a picket sign. I mean, you can do all of those things, but why not take that energy and just funnel it into saving, funnel it into teaching your children about money, funnel it into making sure that your financial plan is bulletproof, funnel it into learning something new like how to invest in real estate or learning about the markets or learning about foreign currencies. I mean, let's educate ourselves. Let's take this time that we have before the stuff hits the fan, so to speak, and let's learn how to protect ourselves. That's what this is all about.
Yeah, exactly. Couldn't agree with you more, Jerry. So your website again, just give us that.
Yeah, it's ftmdaily.com. That acronym is for followthemoneydaily.com, ftmdaily.com.
Excellent. And there's a link on financialsurvivalnetwork.com in the show notes. Just click it, take you right there. Don't forget, sign up to our newsletter, and it's going out tomorrow. That's a promise. Jerry, always a pleasure having you on the show. Thanks so much for being here.
Thank you for having me.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.